Hello again, my Overemployed friends. Today we're going to be taking a look at how you should treat your 1099 income if you do end up getting a 1099 roll. So I've designed a calculator specifically for that to help you identify for your particular situation if you should or shouldn't form an S-corp or just keep it in an LLC or a disregarded entity. So a disregarded entity is either a sole proprietorship or a single member LLC. So sole proprietorship would mean you are just getting 1099 income directly from the business you are consulting for or working for. So they are not your employer, you are not their employee, you are an independent contractor. And so so the tax treatment is the same regardless of whether you have an LLC or not. The only reason you would want to create an LLC is so you could form an S-corp. That's the only reason for tax purposes you would ever need an LLC, as if you were going to make a special tax election for that LLC. So here is just a breakdown of the kind of differences you have here. So like I said, there's no special tax treatment for a disregarded entity. For an S-corp, you're actually going to file a separate tax return for the S-corp. And then information from that S-corp tax return is going to flow through to your personal return. So with a disregarded entity, you're going to pay self-employment tax, and with an S-corp, you're going to pay FICA tax. So these taxes go to the same programs, which are Social Security and Medicare. By the way, FICA stands for Federal Insurance Contributions Act. That's what you're gonna. So they go to the same place. The only difference is FICA tax is paid quarterly typically, and it's withheld from your pay. Whereas self-employment tax is due at the end of the year, and it's typically only paid once a year, and it's just assessed on your tax return with the rest of your tax liability. And self-employment tax only appears on individual tax returns. FICA tax is paid on quarterly payroll tax returns. So the entire amount of your self-employment tax, the entire amount of your earnings when you have a disregarded entity is going to be subject to self-employment tax. An S-corp, only your owner's salary is going to be subject to FICA tax, and you need to make sure you pay a reasonable salary to yourself through your S-corp. So your S-corp will issue to you a W-2 at the end of January the next tax year. So typically you'll work with a payroll provider to run payroll for you and to make sure those information returns, those W-2s and 1099s get issued on time. So you'll receive a 1099 from the company you're subcontracting for, and then from there, that income will go into your S-corp, and then your S-corp will pay you a salary from that amount that you deem reasonable and that you think you could prove to the IRS is reasonable and can measure it to the work you're doing. A disregarded entity is cheaper to maintain. You don't have to file a separate tax return. You only file a Schedule C, which is attached to your personal tax return. With an S-corp, you're not only filing an additional annual tax return for the S-corp itself, you're filing quarterly tax returns. And then, as I said earlier, there's going to be a salary with the S-corp, but you're also able to take distributions. One thing I want to clear up right now is that under both of these, your income tax liability isn't going to change. What's going to change is your self-employment or FICA tax liability. So you're being charged income tax on your earnings no matter what, no matter which one of these you choose. You don't get any additional special write-offs if you're an S-corp. You are just electing to pay yourself a reasonable salary so that the rest of your income, the rest of your business income, isn't subject to self-employment tax. So distributions from an S-corp are tax-free. So you get taxed as you earn the income, in the year you earn the income. And then when you distribute the income, you do not get taxed again. Whereas in a C-corp, typically you would pay taxes on the dividends. So any of you that own stock know that your dividends are taxable because most publicly traded companies are C-corps. And then the last difference here is, like I said, you don't pay an owner's salary as a disregarded entity, but with an S-corp, you're required to reasonably compensate the owner. So let's dive into the calculator, do a little bit of sensitivity testing, and I'll just show you kind of how it works. So we just right here, this will be if you have any W-2 positions. So let's say there's a client that makes $120,000 a year in W-2 income. So it'll show the FICA breakdown here. So this is the amount that will be withheld from your pay in FICA tax for the year. So just the Social Security and Medicare. So the total amount is going to be this $9,180. And that is unavoidable. If you're in a W-2 role, you're going to pay this no matter what. And then your business income is going to be, let's say they get a 1099 role where they make an additional $90,000 a year. So what you'll see here is there's going to be this additional $7,595 tacked on in self-employment tax. So that's coming from Social Security and Medicare for both employer and employee sides of it. So it's 12.4% Social Security and 2.9% Medicare. But it's only 12.4 Social Security up to $160,200 in wages. So this business income, only $40,200 of it is actually being subjected to that 12.4% tax because you're getting close to that wage base of $160,000 by having this W-2 roll. So so on most of this $90,000, you're only being charged the 2.9% Medicare tax. So that's where the $7,595 is coming from. And let's put in a reasonable salary. Let's say for this business income, this taxpayer decides to pay themselves a reasonable salary of $35,000. That's what they think they can prove to the IRS is a good salary for what they're doing. Then let's take a look also at what it would cost to maintain an S-corp. So this can be it can cost anywhere between $1,000 and $5,000 per year, maybe even more, just depending on the cost of living area you're in and the complexity of your tax return. So let's say it costs an additional $2,500. to maintain this S-corp. But you're saving about $2,000 in FICA tax here, because now instead of paying self-employment tax, you're paying FICA tax quarterly, and throughout the entire year you end up paying $5,300 on this $35,000. So you're saving about a little over $2,000 here, but then the additional cost of the S-corp makes it so it's not really worth it. You're actually losing money by switching to an S-corp in this scenario. Now let's say you have $0 in W-2 wages in the exact same scenario. So since those W-2 wages aren't pushing you closer to the wage base, you're paying 15.3% on this entire $90,000. So your tax savings are actually going to be far more substantial. But since a lot of the overemployed community has maybe a mix between W-2 and 1099 jobs, a lot of the times it doesn't make sense to form an S-corp. But if you have, let's say, 3 jobs, you're making $100K at each one, and they're all 1099. You could save like $20,000 a year just by switching